Hey guys, what's happening? Welcome back to The Deal with Danny Brown. Thank you for tuning in and following. If you could, please take some time and leave a comment either on iTunes or YouTube. It's a huge, huge help for us. Also this week, I just can't wait to get into it with Josh Lobel, just one of the coolest, smartest guys I've ever met. Amazing, talented guy. Runs a hedge fund, does a lot of other interesting stuff. Father of 5 kids. Just a good all-around dude. So we're going to get into some really interesting topics. And I always like hanging out with Josh Lobel. So I hope you enjoyed as much as I did. And I'll see you soon. Bye.
First of all, I appreciate the compliments. You were a little heavy on them, but I appreciate them nonetheless. I had to get into your podcast here at your invitation within the first, season.
Yes.
Because once you are in season 2 and season 3, there's no way I'd ever get invited.
It's going to be too big.
I had to be here when it didn't matter. So
that's funny.
So thanks.
From your mouth to God's ear. So you're getting in early. Yeah. You're in the bottom.
It's my greatest hope that in a year or two you look back and you say, like, I can't believe it. In the first year we actually had to have this guy on.
What was that putz doing?
Exactly.
You have a knack for startups and getting in early on ground floor. That's sort of your business. We'll get into all that, but I have to do a disclaimer as well about Josh Lobel. You're probably the smartest guy I know, and not to embarrass you, but you may talk about some topics that I go blank on, and that I just look like a deer in headlights. So if there's any listeners or viewers, especially you, and probably you too, that have no clue what Josh is talking about when he starts saying things, you don't feel like it's just you. It's all of us.
My dear, if you can't say something,
on another level.
If you can't say something in a way that someone else understands it, you're just faking it.
Well, I'm a dummy, so you got to really dumb it down. I have the EQ, the emotional intelligence.
Why would anybody watch 2 dummies talk?
Oh, they're not. They're just watching one dummy talk to one brilliant guy. So we'll get into all that, but let's start from the beginning.
Thanks for having me.
Thanks for being here. Let's start from the beginning. I know you're an LA guy. You grew up in Beverly Hills, although probably not the typical Beverly Hills upbringing. But let's go from the beginning. How you grew up, where you went to school, how you got into your career. You're a hedge fund guy. You've been in the finance business your whole career. Yeah. That only tells a little bit of your story. But let's start with where you grew up, where you went to school, how you got into finance and the hedge fund business.
Well, look, I'm a single child raised as a single child of a single parent.
Yeah.
So I was raised in the 70s. I'm 48 now. And I was raised in the 70s by a single father. And that was an unusual setup back then.
Yeah.
My parents divorced when I was 2, and my mom moved some.
Mine too. My parents divorced when I was 2.
I remember that. Yeah, some measure geography away, so we know what it's like to kind of be raised in a non-nuclear environment. You now have
standard.
You now have a marriage and a lot of kids. I have a
traditional family of 3 kids, and you have a traditional family with 5 kids. And we'll get into that.
Traditional family of 5 kids.
I love your family and your children. Great children.
We're both lucky. And what else are we really here for at the end of the day?
Yeah, nothing more important.
But
sure.
Raised single child, single parent. My dad was a menswear salesman. He worked at the Los Angeles Apparel Mart selling men's suits.
Schmata business.
He very much was in the schmata business. And so I'm the first in my lineal line to attend college.
You're the first.
I'm the first.
So that's a very unique, unusual.
There weren't that many of us. So, if my mom didn't and my dad didn't.
Did your dad grow up in LA too?
Yeah. So my grandparents moved out to the West Coast from Detroit just after World War II. Better climate, opportunity.
From the Midwest.
Get out of there was a great migration west.
Yeah, that's when one side of my grandparents came out. Very common, Jews migrating west for opportunity.
And they all dumped themselves right in the Louis Pasteur Hamilton High School district.
My dad went to Hamilton. My mom went to Fairfax.
Your dad? Did we know that? My dad went to Hamilton.
I think
57.
And my dad is 77.
79. My dad. Okay, so we got to get them together.
Yeah.
So let's make a note to do that right away.
Yeah. The Hamilton, what are the Hamilton?
A few more years, they may be the only guys they know anymore. But
Why is it that so many people from that generation, our parents' generation, are Jewish and went to Hamilton or Fairfax? It's so odd. Because there's not many Jews that go to Hamilton and Fairfax today, but that was a different city. We can get into that. That's another tangent. The LA was very different then.
There's a big metaphor in the American Jewish experience. Brooklyn in the 50s, right? Everyone can relate. And there's a lot of Brooklyn Dodgers stuff going on there, and certain authors and certain celebrities and certain comedians and certainly certain athletes, right? Koufax
Absolutely.
and I think that Hamilton High School in that neighborhood in the 50s in Los Angeles is very much a parallel to that. So
it's right in there,
that's where our parents were raised, and that's and out we came, right?
So you grew up here. You went to Beverly High.
Went to Beverly High.
And where'd you go to school after Beverly? Are you a Wharton guy?
Yeah,
I knew that, of course.
Yeah, my dad was one of those guys who kind of worked really hard to put me 2 inches inside the school district. I grew up in a little apartment on the north side of the Pico Robertson area.
Love it. Just like Jessica.
Yeah, just like Jessica. Exactly.
Could be the
farthest thing from it, right?
So you were the kids that the parents got an apartment on the edge of Beverly Hills, very middle class at best, to get into the school district. There was lots of kids, families that did that. And then there was the kids that lived on the other side of the tracks in the mansions that went to Beverly.
Yeah, that's right. I don't really carry that around. I hope not, but that's true. Now, I wouldn't say like barely on the edge of middle class. Maybe by the standards of this particular geography, it may have been barely middle class.
Yeah, well, I guess. But in today's
I was
world,
wanting for nothing,
yes,
in the grand scheme of life, and just am very grateful for the hard work my dad put in.
Mean streets of Olympic and Beverly.
Brutal, yeah. And now he's got 5 grandkids, right? So, the mean streets, man. The mean streets of Boychik Town.
So tell me how you got into. Obviously, you went to Wharton.
Yeah.
So
I graduated from UCLA, attended Wharton.
So you started here and then went to Wharton.
And I was, because of the circumstances in which I was born, combined with the fact that I was pretty aggressive, reasonably ambitious, and had an intellect which was acclimated towards mathematics, finance, and business.
Okay, so
headed to the East Coast because that's where that in our generation that was one of the ways you could.
Wall Street, if you're smart and you're intelligent and you want to make it big, Wall Street's a huge.
You could at least get this far by just working really hard and digging.
So let's rewind back to school.
If you were prepared to dig it out of the ground.
Were you always like the smart guy in class, math guy? Was it like, okay, were you Mensa on the whole deal? Is that
no,
like
definitely not. And I wouldn't definitely
I would
not.
think that you are, if you ask me.
Well,
if you're not, I'm saying you are.
If so, I'm certainly undiscovered. Growing up without a tremendous amount of what I'd call classical guidance, right? As I said, my dad was a clothing salesman.
Yeah.
So I was lucky to make it to school.
Got it.
Right.
Yeah.
And then, but over time, I grew up as an only child. My mentors were in books, right?
Yeah.
I read scores and scores and scores of books.
And I know you're still a huge reader, which is a big part of
and so you put it all together.
Your view.
I think I put it all together in, kind of an undergrad, graduated towards the top of my class, and then moved on.
Can you pull the mic in a little bit closer?
A little closer.
Me? Yeah, sure.
He's Mensa, but he can't figure out the mic.
That's all right.
That's all right.
My pleasure.
So you're good at school. You get your MBA. Obviously, finance is one of the big pillars of Wharton MBA. So what was your first job into finance? How did you get into it?
So when I graduated UCLA, I went to work at Jeffries & Company here in Los Angeles, which at that time was a group comprised of denizens from Drexel Burnham on the investment banking side.
Jeffries.
That was one of the few places that they went on the investment banking side. And coming out of UCLA without a classical finance education, I was lucky to get the job, worked hard, scraped my way in, and did my very, very, very best.
That's before grad school.
That's before grad school.
Yeah.
And then I moved to the East Coast, attended Wharton, and then I began what I consider to be the adult phase of my career. I went down to Morgan Stanley, and Morgan Stanley at that time was a really interesting place. It's still, one of the most favorite places certainly the favorite place I've ever worked. I enjoyed it.
Wow.
Tremendous respect for the culture. Incredible place. And like the classic pre-IPO Morgan Stanley partner was a, kind of raised in the Northeast or in the Mid-Atlantic, West Point or Annapolis, 4 years of service, HBS or Wharton, back down, then to the Co. And, the ethical standards and the code of honor and the character back in that era, and I'm not saying anything about what it's like in this era, it's just things have changed on Wall Street, was fantastic. I was there at the very tail end of that.
It's very noble.
When
That's
these
interesting
classic
to hear
lions were walking around. And so I was there for 4 years, 3.5, whatever.
That's good training ground if you're getting introduced to the big time, yet there's some nobility and some integrity around it. I mean, I think that's a really good place to be entrenched and have your first experience, because that's going to be something that influences you forever, whether it was a negative or a positive. In this case, a positive. I mean, that's something that you carry with you for sure when you're at that 100%. Very impressionable stage and you're looking up to these big ballers. If those guys were crooks, that would have been your education, and so you got a good education studying
maybe I'm naive, but I'll admit it fully if I am, but I didn't see a lot of crooks at Morgan Stanley in that era. So that is my wife, the mother of the 5 children.
Good.
We will turn this off.
I was wondering if that was
Would
one
you
of
like me to talk to her while we're?
Sure, I'd like to get her on the podcast. Can you ask her? I know we got
we'll
big
ask her
things to
later.
discuss.
Yeah. But in that era, there was, there was a certain type of guy who walked the halls of that firm.
Yeah, that's
that was
interesting.
Deeply admirable.
Yeah. So how long were you there? What was your first run?
3.5 years, and I was in the global M&A group.
Okay.
Working on a whole variety of assignments for companies large and small, a lot of tech companies, a lot of telecom companies, including a couple of the firm's lion accounts, which probably shouldn't mention here because there's always a confidentiality with respect to who those are, but a smattering of Fortune 50 and gigantic financial sponsors.
So you cut your teeth on just big time business.
It was a lot of work. Yeah, I was young. I was junior. I was at the bottom of the heap.
Long hours.
Lot of long hours. Right.
What was a typical hour? What are you talking? Sleeping under your desk
there
kind of thing?
There were plenty of those, right?
But was it like 16, 18-hour days?
You have a first. People say that you only get a first chance to make a first impression, and that's a cliche. But it is a cliche that is a cliche.
True.
It's there. It's there for a reason.
Like location. It's cliche,
100%. 100%.
Hello, it's
spoken
true.
from the corner of Beverly Drive in Wilshire. Right?
Yes.
I went in hell's balls to the wall. I gave it everything I had.
Yeah.
And, I'll be honest and say that Morgan Stanley was a firm that gave back.
Yeah.
They rewarded me with the assignments that I wanted, eventually went into into a division, one of their private equity groups within the M&A department, where I focused largely on tech and telecom stuff.
And you're just 20 still. This is after grad school?
This is late 20s.
Late 20s.
Right out of Wharton.
So you're living
the dream in New York City.
You're making money, living the dream as a young guy. I mean, that's a great job to have. I mean, it's hardcore. It's your life, but you're able to really live a great life. Young guy going out in New York.
So I lived in a 400 square foot apartment. Now we're in Los Angeles.
Than this office.
Can you imagine a 400 square foot apartment? And you want to hear something even cooler? Everyone was jealous because
you had an apartment.
This was in a really, really good building. The only thing is that in classic New York style, it was a really nice building, but it was a tiny little apartment. Now, here's the funny thing about it. Apparently, the people who used to live there was a 3-year-old baby, because next door was a really large unit. And in fancy New York style,
was a bedroom
they had bought this separate studio apartment. So I had across the top of the crown molding, what do you call it, had been tiled with cartoon figures and giraffes and things like that. So it was always
that makes for a good setting for a young bachelor in his 20s.
It was a social juxtaposition, and I was always happy when people gave me the benefit of the doubt. But of course, there weren't any of those.
So you're in New York. You're working hard. You're starting to make some money, learn the business. You have your own apartment. When was the next phase? Was it pretty quick after that you got into hedge fund business?
Yeah, exactly. So that's exactly right. So just a little bit of financial history here, which I think is worth repeating.
For sure.
I started at Morgan Stanley in August of 1998. And if you were to kind of look through the annals of financial history, that was exactly smack dab in the middle of what we call the Russian crisis, which you may recall a very famous, very, very levered, very large, very storied at that time group of people running a hedge fund called Long-Term Capital Management went bust because their highly refined algorithms, which had served them so well for such a period of time, failed. And it was supposedly a very low probability event that caused the failure. But as others have pointed out since then, Nassim Taleb with the Black Swan, et cetera, that is exactly kind of what happens, right? When you make very, very large and very, very levered bets, assuming that unusual things don't happen, occasionally they do.
And when they happen, it's going to be painful and a big
smoked,
issue.
Man. Yeah. And it took down, various currencies, markets around the world were
Is that
roiled.
Because there was billions of dollars tied to that investment? I mean, how do you take down companies and economies? There must be billions of
Well, it took down markets. It didn't take down companies in the economy, but it did take down markets. And when you have a very, very large player, well, let's make a real estate analogy because we're here at Compass today, right?
Yeah.
Let's assume that somebody owned, I don't know how much inventory would you say is for sale in Beverly Hills right now?
Let's say 100 homes.
Well, let's say one guy owns 70 of them.
Yeah.
Now, this is not to scale this metaphor, but it makes the point. And if he were looking to sell, if he needed to sell, if he actually absolutely needed to sell
70 homes.
Well, what if he owned those 70s on a warehouse line, those 70 homes financed on a warehouse line from a bank that itself was in trouble and could call that loan back on 3 days?
Yeah.
Or on 2 days or on
one
one day.
Flood the market with distress.
What would happen if this guy called you up and said, Compass, I got 70 homes to sell and I got to do it by the end of next week? What would happen to the rest of the market for a while? it would get thrown into complete disjointed chaos.
Complete chaos.
And that's what happens in the markets. When you get certain portions of the market which have taken irresponsible...
So it's a supply and demand type of...
In the short run, any tradable security is simply a commodity. It's merely worth wherever the equilibrium price is between buy and sell. That's why when the markets absolutely deteriorate, you can get enormous bargains. That's Warren Buffett's Mr. Market, right? That's where he says, let Mr. Market give me the opportunities, right? So that happened. That's what would happen if you had a big giant forced sale in real estate. It's a much more slow moving market. You tend not to see that. But in the capital markets, it happens rather quickly, rather brutally, and it actually happens reasonably often, several times within a given decade. And that's what happened my first day at work. And I'll never forget the head of investment banking at that time was a guy named Terry McGee, kind of one of the longstanding senior officers at Morgan Stanley. He's left some time ago. But in the very first speech, he came out and everyone was quite frazzled. They had to come out and welcome a bunch of employees to their first day on the job at a reasonably storied firm when all hell was breaking loose. And he said,
Not
look,
what you'd expect.
He says, I got to tell you guys, this is the best of times and this is the worst of times. He said, I got good news and bad news for you. He's like, the good news is I say that every time, every class. So the bad news is I believe it.
This time it's as real as it gets.
Right. So we didn't know.
So that's your introduction to Morgan Stanley.
We didn't know if we were going to be around for very long. That said, though, most crises come and go, and they really do. And, if history tells us anything, staying power itself is generally rewarded.
Definitely.
It was a short period of time later, and we were cooking again. The tech and telecom market was on fire. There were IPOs galore. M&A was flourishing. Eventually, the emerging markets recovered. And then several years later now, fast forwarding to 2001.
The dot-com bust.
The dot-com and telecom bust. I was in the private equity group at Morgan Stanley at the time, working mostly on kind of difficult telecom workouts of investments.
So you were right in the thick of it.
I was right in the thick of it. And at that point, I sort of realized that there was a transformation occurring, right? That private equity was going to take a while to kind of build your career there. Investment banking was to be roiled for some period of time. And meanwhile, in the public markets, if you're a public market investor, you don't have to negotiate transactions, right? And so the hedge fund industry was then exploding. There was a huge opportunity for me to join a group that had just spun out of Goldman Sachs, but which really couldn't recruit from Goldman Sachs at the time due to, I imagine, non-competes and non-solicits.
So you joined that group.
I was very lucky to join a firm called...
All right, so let's slow down and dumb it down a little.
Let's dumb it down.
Hedge fund. Let's get into what a hedge fund is. Obviously, it's you're hedging investments and trying to tip the odds into your favor so that you can make a better return and beat the market. But let's hear it from you. What is like the 101 hedge fund definition?
I'm going to give you 1A and 1B. Okay, not even 101. Okay. The word,
and I know there's a lot of different.
The word is types. I'm going to tell you, this is what it used to mean, and this is what it actually means today in colloquial usage.
Perfect.
What it used to mean was you hedged. You hedged your bets. So if you bought $100 worth of stock, you'd short 90 or 80. And there's different ways to figure out exactly how much you should based on how much risk you want.
That's what it initially meant.
That was a classic hedge fund, right? Yeah. You had risk on both sides, right? It was like, I'm going to drive with a foot on the brake and a foot on the accelerator and just get the difference just enough.
And in that difference, that's where there's tons of opportunity to be made if you get it right, and you can lose your ass if you get it wrong.
In theory, a perfect hedge fund would be long and short the exact same amount, but the composition of the longs would outperform the composition of the shorts, or they would both make money in the perfectly ideal sense, generating returns on both sides of that book. Your shorts go down, your longs go up,
and vice versa as the markets change.
And you take out all market, and effectively by being long and short, you don't have any net market exposure. Right?
Okay,
so that's the classic exposure. What it has come to mean these days when most people say, "Hey, I've got a hedge fund," because we went through by the way, the number of hedge funds is shrinking dramatically.
Yeah, I've heard that.
But and there's reasons for that, which are interesting, and we're talking about. I don't know if in this context, but for years and years and years, everybody's been talking about hedge funds. All it meant for the last 10 years was I invest in the public markets or something like that. Maybe it's private debt, but something reasonably tradable, and I take a percentage of the profits.
Correct.
And that is what most people mean when they say hedge fund, and that's what it kind of means in colloquial usage,
and then,
even if they're not hedged.
Right. And then a hedge fund versus just going to a financial advisor. Hedge fund, what's the business model when someone owns a hedge fund? You get a percentage of the profits and a fee up front.
You get a management fee. based on the amount of assets that you have.
Yeah.
And yes, and then there's an incentive fee based on your performance.
Profits.
That's the
Versus,
classic model.
That's the classic.
Now,
Versus a financial advisor that may just take a percentage.
But that may just take a management fee.
Yeah.
That's exactly right.
Got it. All right. So
there's pluses and minuses to both.
You've spent the last 15 years running a hedge fund, Archer Capital.
13, yeah.
14 years?
13.
13 years. So that's where you've been. You've been running your own Fed. You have a partner in that. You've launched it here in LA or out of New York?
So we launched the business in New York in 2005, in late 2005, eventually with the idea of operating the business significantly out of Los Angeles. It was a real play for me to get home.
Yeah.
So we opened up the Los Angeles business in 2008. And for the entire time over those 13 years, AUM, meaning our assets under management, approximately around $1 billion on average, maybe 900-ish or something like that. Kind of went down. It started small. We started with with a desk like about this big.
Are these people investing, or is it people you don't know, or it's a combination? Like where do investors come from to a hedge fund?
Well, like any business where you're starting up, right? And back then we were starting up. You start
friends
with
and family or people that trust you.
Or let's say quasi-institutional investors, but ones that you know pretty well.
Relationships,
right?
Yeah.
And then over time, you become more of an institutional presence where
people are looking.
Folks are coming to you, and you may not know them already, and you're forming relationships. So, but mostly it's pension funds and endowments. That's the business I ran.
And do hedge funds have a specialty? Like, I do manufacturing, I do technology, I do retail. Is there certain industries or sectors that your hedge fund or any hedge fund would, or is it?
Right. So I'll tell you what we specialized in for years. And it changed a little bit over time as the markets change. And when markets change, opportunity changes, right? How do you make money in real estate? Well, it might be luxury homes one year. It might be apartments the next.
I'm still trying to figure that out, Josh. How do you make money in real estate?
Something tells me you're doing pretty well, DB. I'm not worried.
Good. I'm glad. If you're not worried, then
Los Angeles impresario over here.
You.
Yeah.
As long as you're not worried, I'm good.
I'm confident, actually. I'm not only not worried, I'm
cautiously optimistic.
No, I'm just flat out optimistic when it comes. I really am.
I'll take it.
I really am.
I'll take it.
You're a winner.
Take that to the bank. Thank you.
So we invested in screwed up companies. Or we invested in companies that were pretty decent, but screwed up in a particular way.
They're in distress financially, or what do you mean screwed up?
Right. So it could be a few different ways. They could have an operational issue that was in need of redress, right? Perhaps a company had underutilized factories, or they had underinvested their capital expenditures for years at a time.
Understood.
Or maybe they were in engineering. There's one I could think of, particularly, I won't mention the name, it's a public company, that had a very, very highly refined engineering culture. And they were gadget guys, right? Very refined engineering culture, but you couldn't find a salesman anywhere around the place. And the gadgets were more important than the return on investment in the gadgets. So capital budgeting was a little weak as well.
Okay.
So,
there's different issues depending on the
just
company.
like in real estate, if you really want to make money, you have to buy an asset that has a problem that can be fixed.
Yeah.
Right. And that's what we specialized in, right? It was looking at companies that have a particular discrepancy, a gap between its potential and what it's actually performing at. That's on an operational side. Now, there's also plenty of companies that are just miscapitalized. Their debt and equity ratios are off. Management's not doing the right thing. The board isn't particularly aligned with shareholders and is not doing the right thing. So in any given situation, there's going to be something that's causing the price.
Some issue that you feel you can address and fix and add value.
Or that someone else will do, and you can ride along. In those cases,
that's my next question was going to say. So when you have a hedge fund and you're one of the companies you want to invest in needs, a factory operational specialist. Do you have operational specialists that work at a hedge fund with you, or you're like a consultant where you say, okay, we know the best person that does this type of factory operations is this group. Let's hire the people that are needed, or the things that are. How does it actually, or is it all part of your company?
I would say it's a range. Okay?
It is a range.
I'll address the industry as a whole for this answer, because it is kind of interesting, right? If you invest in a BlackRock equity fund, right, they're not typically being active. In fact, they may be a robot at the end of the day buying large cap stocks, right?
Yeah.
If you're in a Vanguard fund that buys Boeing stock, no one's doing anything. right? No one's doing anything, right?
Buy and hold.
Right. At the other end of the spectrum, you will have active investors that are a little bit more hands-on, right? And that can be anything from like a triad. Let's take a very famous active investor or activist investor, as sometimes the term is sometimes employed.
Yeah.
Like Nelson Peltz at Trian Partners, right?
Okay.
He's a significant investor and has board presence on GE, Procter & Gamble, Pentair, Mondelez.
A lot of the big S&P.
Yeah, large companies, some of the large significant companies, but he's exerting he's a change agent, right? He's finding issues with each of these companies, which due to entrenched management or maybe just a non-modernized management or board that's not perfectly aligned. Not casting any dispersions on the management teams of the boards of those companies. Yeah. But there's clearly in his line of work, he is recognizing
he's looking for those.
He's looking at a gap between what it can do and what it is doing, and then he is applying, in his particular case, I think, like a very high-minded, constructive, value-add approach to that business, and that's the approach that I endorse most wholeheartedly. I don't really come from the school of investors that likes to cause trouble for management team and boards and rattle cages, and I'm not saying there's not a place for that. Yeah. I'm just saying that's not what I do. Anytime we've ever been involved in influencing a company, it's typically been more along the lines of partnership. Going to management, going to the board, and having an earnest discussion about what should happen. Yeah. And you know what? If you're right enough, if what you're saying is compelling, they should realize that, and they should realize that this is an opportunity to fix it in a polite, respectful, proactive way. Otherwise, the rough guys do ultimately
come over and push you out. Is it common where a company that a hedge fund's looking into to help or partnering with, where they would say, okay, we need someone to run it, and you or someone at your company becomes the CEO or becomes the head of marketing because they have a marketing need, or you actually get like human labor from your own hedge fund that just slides over like, oh, here's our marketing guy. Does that happen?
Typically.
Or you find someone from outside that's a specialist?
Typically, it's finding someone from outside. I do think there's room in the marketplace for a very operationally focused value-add public market investment firm. But most hedge funds, I'd say the overwhelming amount, don't do that. They're working with outside operational consultants, if at all, if even that. But there is a significant amount of room. I think there's a significant opportunity in the marketplace right now for more long cycle capital with a more operationally intense approach to doing due diligence and implementing change. And because you just don't see a lot of that right now.
Yeah. So hedge funds and the big money, and
now we're being esoteric where we didn't want to be.
We won't go there. Yeah. Here's something I want to add on to. I think when I think about hedge fund, and when we talk about hedge fund guys and these big players and the big money and the glamour and the lifestyle. But I know we had a conversation. We were having dinner at our house a couple of weeks ago, or a month or so ago, and you were saying, I've woken up at 5 or 4:30 every day for the last 20 years, and every night I go to bed you were just casually with the pressure of whatever my investment fund is, and every morning I wake up with the pressure. That's not stuff that I think that the rest of us think about. But you think about your jobs, the pressure of having $1 billion that's your responsibility every night. Some issue can blow up in the world, and you're responsible. So you got to be able to sleep every night and wake up every morning with that pressure. That's immense amount of responsibility. And how have you been able to deal with that? Is that just the makeup of anyone that takes on that kind of job? I guess clearly where I'm getting at is there's so much glamour involved with how much money you can make in hedge funds, but what people probably don't realize is the pressure and the stress and what that would really be like when you have to wake up that early every morning with fortunes on the line.
Show me an industry. Show me a person in an industry, whether it be tech, whether it be athletics, whether it be entertainment, whether it be real estate, where someone is doing extraordinarily well and it's as easy as they're making it look, right? The bottom line is...
Never, of course.
It's a grind. It's hard work. You got to get up in the morning. You got to do your work. If you have customers, in this particular case of money management, you've got actual investors. Yeah. You have a fiduciary duty with respect to their capital. You owe it to them to be thinking about them at every necessary juncture. And that's the rhythm of the business. Yeah. And there's no escaping it. And if you live on the West Coast, then you
have to get up 3 hours
the
early.
Equity markets tend to be more East Coast hours driven.
What time do you usually get up for work?
By the way, way, I take solace in the fact that there's a lot of guys living in New York who trade Europe. So, everybody's dealing with the time zone problem. Everyone's dealing with the time zone problem.
So what do you wake up at 5, at 4? Like, when do you...
Yeah, I mean, typically speaking, the rhythm of a hedge fund existence out here is you're probably up at 4:30, but with one eye open, just making sure something really ridiculous didn't happen. Then you try to get back to sleep till maybe 5:15 or so.
Oh, good. You sleep into 5:15.
And then
just like you.
You always get up 15 minutes before the alarm goes off. I know you do. The alarm hasn't woken me up
I don't even put
since I was
alarm
20.
on.
I don't even need it either. Right? I can wake up without an alarm and guess within a minute what time it is.
No, I have an alarm on.
That's my parlor trick.
If it's 3 p.m. and I haven't slept in 3 days because the kids kept on like, I need a 20-minute nap. Then I put on the alarm to wake me up because I have a showing at 4.
Yeah.
But in the morning, I'm not. That's just you're up. I mean, usually I'm up because the kids are up, but no, I'm not up at 4 or 5.
Right. It's habitual, right? I mean, but you're not up at 4 or 5. But
I'm not up at 4 or 5.
You're working late hours though, right?
I mean, it's 7 days a week, but it's not every day 4 a.m. There's an intensity and a relentlessness to that. But that's like the Kobe Bryant Mamba mentality. He was on the track at 3:30, 4 a.m. every day of his career for 20 years when everyone was sleeping. Look, you want to be the greatest in the most competitive field, you got to do extraordinary, over-the-top type of work ethic.
And I am far from the greatest in an extraordinary field.
But I'm just saying, if you want to compete, if you want to compete at the highest level, let's just put it that way.
Then you got to get up and you got to get the job done. And you can't be sleeping through it, period, no matter what you do. I would encourage...
No shortcuts.
Yep, I would encourage everybody, I would encourage your viewers to read up on Mark Wahlberg's. Let's bring in a more culturally, more culturally present example. He's got a lot going on. He's got a lot
of businesses.
He's got a bunch of kids.
Does he have 5 kids?
I think it was 4, but I could be wrong. All I know is that he was taking all his kids through Whole Foods when my wife was taking all our kids, and they took one look at it like, "Wow, you have your hands full." Yeah. Like it's like everyone can relate to that experience. He's up at 4 a.m, right? He gets up in the morning. And I don't know exactly what order this occurs, but he devotes
training
time. He's training. He devotes time for prayer.
Yeah.
He eats. He works, and he's in bed early, right?
Yeah.
And it may look easy from a distance, and it may look glamorous, but the fact of the matter is,
he's working his ass off.
Yeah, there's no one who succeeds in life without working their ass off.
I agree.
Period.
I think that's a really important piece of information and advice because I know there's probably young people that say, hey, I want to get into Wall Street, I want to be a hedge fund, I want to get into this or that. But I think that's the advice. There is no shortcuts. You got to work your ass off.
There are no shortcuts.
And if you're not prepared to do that, you're not going to be able to compete.
I agree. There are no shortcuts in life.
So getting back to waking up, do you have a routine? Do you do a morning meditation, workout? What gets you going in the morning? Or is it like, I got 5 kids, here comes Ben, here comes, so here they come.
I do everything I can to get out in the morning before they wake up. That's a secret. Don't tell anybody. Yeah.
I got to start doing that. That is a good idea.
And you felt sorry for me that I got up so early.
Yeah, you're like, Sometimes when I leave the house in the morning, I feel like, it's a relief.
Look, I get up early around 5 a.m. I check my critical bit. That's what time I actually move my body out of bed.
That's time to start.
I check my critical business. Depending on what's happening, I'm either into the office to address it, or maybe I can address it, a little bit remotely, get to the gym, and then get in the office by 7 or something like that. But, you kind of have a few A/B switches depending on whether the world's burning or someone, just like, if you wake up in the morning and you got a client pounding on you,
there's certain fires that are being put out.
Your routine just changed, right?
Yes.
That's the way life works.
You get derailed and you get back on track when you can.
Yeah.
Well, let's switch gears.
You can't say, excuse me, I need to stick to my routine, sir.
Sorry.
Yeah.
Get back to you in 4 hours.
Right. Excuse me.
After my meditation and my Pilates.
I'm meditating. You're working on my core.
And I'll be back when there's a swell. When I'm back from Malibu, I'll get in touch with you.
I don't want to interrupt my perfect squat here.
No, unless you're Brian Burkett. Then Brian Burkett, he's surfing that swell. He's getting back to you.
It's all business model driven. The avocados are slow,
business.
Man. It goes slow. They don't scream.
The Dos Pueblos ranch business. It's a different type of business.
Yeah, but I'll tell you what, man. You show up to his ranch and take an axe to the water pipeline. He'll be there at 3 a.m. working.
That's right. That's right. The water well runs dry. We had a great barbecue. Guys can't trip at Dos Pueblos. That was
incredible.
That was and this is an interesting point because I want to bring this in. We talk about this, and I know you're big on family values and purposeful values and living a full life and a healthy life. You're very mindful and thoughtful of how you're raising kids. You have 5 kids. It's so challenging, as we know, growing up in a big city like LA, the entitlement, the wealth, what the kids see at an early age, the tech that they see, the screens. You've really seemed to, like my wife and I always look at you and Michelle and go, wow, they've really got it under control, but really have thought through and seem to spend time with trying to raise your kids. I don't want to say the right way. There's no right way. Everyone's different, but in a way that's unusual and unique for today's parent in terms of your kids are outside a lot. They seem to be using their hands, learning things, not just on tech and not just entitled doing the crazy stuff that most of us all are seeing every day. But where's that come from for you? Speak to that a little bit, because I think it's very impressive and very admirable, and it can't be easy. But tell me about why that's important to you and your views on raising kids in the big city.
Well, look, if I felt earlier in our conversation that the career compliments, and I joked about kabuki theater, this one I don't joke about. That is the highest compliment that I can try to earn. If I look at you and I ask you, what the hell are you really here for?
Yeah.
Right. You're not curing cancer. You're awesome at what you do, but you're not curing cancer. And buying low and selling high isn't curing cancer either. Right.
Closing escrows isn't saving lives.
You're not saving. You're not saving humanity.
Right.
So it's the most important work we do.
Agreed.
Without question.
And the most complicated. There's no manual.
There's no manual. You figure it out. You're complimenting Michelle and me from a distance. You know us really well, but we have an infinite amount of insecure moments. Yeah. Are we really doing this right? Did she really just say that?
Yeah.
Is my son really that lazy?
Yeah.
Is that going to persist till late in life?
Yes.
How many
so
times
you're
have you
having
thought
the same anxieties that the rest of us have. I'm sure you're human, but
including the ones that are really lunatic, like, oh my God, maybe his fingers can't really write. Maybe there's a problem. Oh my God,
maybe he can't hit a fastball opposite field home run 450 feet. What am I going to do?
Just like his dad.
Yeah.
Or I can't believe the teacher at school really said that. Is that true?
Yeah.
Let me listen again. Oh, that's BS. I'm not sure I agree with that. Or I really have to admit I agree with that. So look, it's hard work. It's hard work.
So it's constantly evolving.
Sure, of course.
You're trying to constantly improve and figure it out. And it's not easy for you guys either. That's good to hear. Because if it was easy to have 5 kids.
Brother, it's chronic. It's a chronic game. It's a chronic ground game. You got to love it. And you got to believe it. And you got to believe there's no higher purpose. And you will be rewarded for it, and your kids will be really happy about it. I bring to it one extra that feature. I said I didn't grow up with brothers and sisters.
Yeah, you grew up the opposite.
Yeah, so I know how important this is, and I'm still learning. Right? I'm like, oh, that's a birth order thing.
Well,
I
never worry when I'm sending a kid to your house that, oh God, they're going to be having ding dongs and playing, Minecraft for 5 hours. I know they're going to be at Camp Lobel. Yeah. They're going to be playing ball. They're going to be outside running around. They may be doing a science project or some 3D imaginational thing. Whatever they're doing, I know they're doing something productive. I can't say that that's the case for most people. I can't say that's the case at my own house. I'm always battling it.
I don't know. Ben likes going to your house.
Good. Because he's probably like, he gets away with stuff.
He gets away with
get a little extra sweets. Ben's got the sweet tooth.
Fair enough.
So
fair enough.
Let me go a little further with this.
Thanks for telling me.
Why? I know it's important for you to get off the grid. It is for me. Wilderness, camping, fishing, getting the kids outdoors, getting away from the city. We talk about it all the time. Oh, we should buy a ranch and fish and live off the land. I mean, we've done Dos Pueblos.
And you're starting to send me some right now. By the way, I can't afford any of those ones you're sending me. So just letting you know.
Well, then you should get in a different business.
Yeah, fair enough. Yeah.
Hedge funds is not lucrative.
I'm assuming those are highly negotiable in this environment.
You need a Mike Trout type contract.
Dude, if I could do 1/10 of what Mike Trout could do.
Any of us could.
Yeah, if any of us. I mean, that would just be.
Certainly wouldn't be sitting at this desk
to live in that body for a day would just,
just to feel what that feels like one moment.
Yeah.
So what you do? You go to the wilderness? You take your kids?
Right. So you know what? One of the interesting things is, like, I ask a lot of dads. How about going on a trip? We've talked about it a lot. We made one, right? And you know what? Like, a lot of people don't have time. They can't do it. And I actually think that folks sort of over discount the present far too great of a degree. You really do have the time, right? What's the real consequence of unplugging for a couple of days and getting out into nature with your kid? But if you can't do that, if you can't unplug because you convince yourself you're too tied to your stuff or you're worried too much, probably unnecessarily, then you'll spend the week, you won't do anything. You'll spend the week griping about the fact that your kids look at screens all the time.
Correct.
Right? And you just created this, right? You have to break free.
You have to do it.
You must.
And it's so hard, but you have to do it. Things are hard. Life is hard. You have to be proactive about it. I mean, we had a great time. We went to Dos Pueblos.
Don't be afraid if your kids wind up doing what you
tents.
do. Yeah.
We had, we barbecued steaks, ate with our hands, had bottles of wine with no glasses. The coyotes were making it was brilliant.
Yeah, we played We played an interesting version of cornhole.
Yeah.
It was a lot of fun.
We did a lot of good things. Where else can I take this? There's so many different things. Let's get into your outside of business and family interests. I know you're a huge reader. It's a big part of what you do. You've always told me the more I read, the more topics I can go deep dive on, the more perspective I can have when I'm analyzing companies and doing what I do every day. But I think for you, it seems to be more than just having a broad knowledge base so that you can invest better and have a better skill set for your job. I mean, you seem to be passionate about reading and certain topics. I know you're very into the military, you're a big flyer, aviation, which I don't know. I don't think I have any other friends that I could say are really into the military and really into aviation. So,
I'm into supporting our veterans. And
I know that's big for you.
Yeah, and that's... So, on a couple points here, let's just talk reading for a sec. I spoke at Columbia University a few years back to their, investment program. And someone said, what should I read to become a good investor? And they were looking for a recommendation for a business book, right? How to be a great investor.
Fundamental
Warren Buffett's written a book, right? Seth Klarman's written a book, which I have a first edition of, by the way. And it's a classic.
Of course you do.
It was hard to get, but I have it.
Yeah.
If anybody ever wants to see it, I'll show it to you for a minute. And then, but you know what my answer is, right? I think that the skill set, the financial skill set, that's easily taught, right? I mean, that's a couple years in school, if that. Anybody with a reasonable brain can kind of figure out how to go through the financial motions.
The numbers.
Really what you should be reading is about the world, right? You should understand the context in which your investment decisions are made, so you understand appropriate inputs, right?
100%.
So reading, right? You need to be a citizen of the world. You can't be a good investor. You can hardly be a good businessman.
I agree.
Right? So I think you let your curiosity fuel you. My answer is you should be reading about geopolitics. You should be reading about demographics, humongous impacts, right? If you want to understand if we're in an inflationary or disinflationary economy for the next 25 years, you better understand demographics, which means you need to understand the composition of our population, how it ages, at what pace, right? How does that compare to the housing supply? How productive are people at different stages of life? Who's getting displaced, right? These are
fascinating. But
this is what drives our society, right?
Yeah.
And so you kind of have to have that in your brain in order to do anything, certainly in the investing world, right? And I've just always been curious and a big reader. I never had a choice. There was no one to play with. So
I just thought it was so poignant when you've said that to me, and I thought, it's so true. I try to read and get informed on several topics too, just because everyone I meet is a potential client, and I want to be well versed in everything. I haven't dive as deep as you or as broad as you on certain things, but I just think it's such a important point for anybody to be a citizen of the world, to educate yourself on different topics, go deep on topics that interest you, of course, and I just think it's a phenomenal.
But if you're feeling like with all the kids in the job, it's hard to read.
Yeah.
I'm right there with you, man.
So you don't get your 2 hours of quiet reading.
Not as much as the old days. That's for sure. I don't get quite anything at home.
I know you're also big into nonprofit charities. You're big involved with Cedar.
Let's talk about Let's talk about the military for a second. Can I just circle back to that because you asked about that? Look, we have a really interesting situation where we have hundreds of thousands of veterans who have served overseas, right? By the numbers, most in Afghanistan and Iraq, those who served in combat theater, but certainly all over the world, right?
Yeah.
And on a much smaller level, but equally acute, we have members of our intelligence community who have served overseas and under extremely trying circumstances. And we have a really interesting dynamic in this country right now. We live in the city of Los Angeles. I want you to tell me right now, how many people did you grow up with who are veterans?
Very few.
Very few. Fewer than 5 of all the kids you knew growing up.
Probably less than that. Yeah.
Probably.
I don't know if I could even name one.
You don't even know if you can name one. Right.
Yeah.
Exactly. And how many people in your professional existence, are veterans, former officers, former enlisted folks? I mean, if we walk the halls of Compass, what's the...
very few. There may be some.
There may be one or two. Or
certainly in my immediate network and my social sphere, it's very rare that somebody has that background.
So we have a fascinating situation in this country now, which we have to deal with, where the folks who serve in the military and who do very, very difficult work and very loyal and very patriotic
the
work,
hardest work,
are separated. It generally comes from a population that's different than our than where the coastal fancy pants
Yeah,
live.
the big urban centers.
And I'm a coastal fancy pants, so I'm not trying to harsh on us here. Yeah, I'm not trying to harsh your
narrative,
right? Yeah, it's certainly not a political narrative. It's apolitical entirely. But as a nation, I've always felt it's become abundantly clear to me that we risk viewing that our decision makers and our wealth in our concentrated wealth centers, and where we have so much talent in these big cities, in our big coastal cities, tend to view the military and veterans more as a Praetorian Guard, a French Foreign Legion, a force apart, right? And so when we walk down the street or we have a dinner and someone says, like, strongly advocates military action in a foreign country, yet doesn't have a son that serves or doesn't have friends whose sons serve and doesn't have friends who serve
totally
or serve.
Disconnected from what the consequences would be.
It's very easy to say we should bomb country X when your son's not in the B1, right? Or nowhere near it.
And think about that perspective. If your child is in the military, now think about any military engagement and your views on it. If your child is going into that battle zone, how would you think about whether you think we really need to be there?
That's right. And so we have trouble raising money for veterans, right? They come back, they're busted up. PTSD is a huge issue.
It's so sad. Right. They put the risk their lives and they don't have the support. I just find that horrendous.
Totally. So I view it as one of my primary philanthropic missions.
You've taken on that mission as, hey, I got to do what I can to help.
In this city, right, where people are really open to it. People want to get involved.
I think you're
Folks
right.
want to support it. They know they need to, but they don't have enough on-ramps and they don't have enough interfaces to do it.
I agree with that.
But when
I'd want to get involved.
Of course you do.
And I only know through you the few things that you've.
And when we ask, we get.
Yeah.
We get. A lot of people show up and really care. And if you do enough of it, not only do you get support for the people who need it, from the people who are able to give it, but you change attitudes and you meld and you recreate a sense of community around that particular group. Yeah. And it's so important.
I think it's so important. There is a huge gap between.
These are our salt of the earth heroes.
Yeah. And it's a huge gap between the respect and the admiration. And we need to be able to educate and understand that those people have to be honored and appreciated and supported. I mean, they're keeping us safe. They've been doing that for generations, and they're so underfunded, and there's so many issues. And you could see the homelessness all over our city. It's getting worse, and a lot of it is around the VA and the military type stuff. That's a whole nother topic. But tell me about. I know you have a foundation that's involved with that.
So I don't have a foundation, but
you're involved with the foundation.
Yeah, so I serve on the board of directors of the CIA Officers Memorial Foundation.
Yeah.
Now this is more of this is not does not address explicitly the needs of military veterans.
Yes.
It addresses the needs of the families of officers of the Central Intelligence Agency,
specifically for that.
Yeah, who have been either killed, have lost their lives, or been significantly impaired while on active duty.
Yeah.
And in that particular community, they don't have the luxury of speaking their story in sunlight.
Everything's private.
Things are quite private, right? Many of them were operating in a more clandestine fashion when their life kind of went off the rails, or when they sustained an injury, or God forbid, a death, which happens, and someone's got to take care of those kids.
Yeah.
And so that's
families and kids and
that's
wives
what this foundation
and husbands.
does.
Absolutely. That's fantastic.
100%.
You're also very involved with Cedar Sinai. You're a trustee. Talk to me about your
the trustees are I will be a trustee in like 25 years or 30 years, but I'm not. I'm
getting ahead of myself.
You gotta,
talk to me about your involvement with Cedar Sinai and what you're doing with them.
So at Cedars, I was very fortunate when I moved back to Los Angeles from New York. One of my first bosses out of college was very involved with Cedar Sinai and says, look, you've moved to Los Angeles. You need a charity, and this is a really important one. And, as we've grown up here in this part of town, right, we've had babies born there.
All my kids were born at Cedars.
Yeah,
I was born at Cedars. Cedars Lebanon.
Is that right? Cedars Lebanon, right?
Downtown.
I mean, they're now right. Yeah, totally. I was born at Hollywood Presbyterian, no particular reason.
Very edgy,
but that's very edgy. Back then, I don't know if it was edgy or just in a dump, but but it's edgy now. It's edgy now, and and we've seen folks on the other end of the life cycle. Yeah. At Cedars, this is an incredibly important institution in our lives, and Cedars is actually very interesting, right? It's not just a community hospital. Very few people know this. They're a PhD granting national academic research institution as well. They do a significant amount of translational medical research. They are a consolidator amongst hospitals in the Southland. So it's a metropolis. It's a medical metropolis
institution.
Yeah. So I was very fortunate at I joke around. I think my primary qualification was my age, because many folks on the board were, looking forward, were kind of a decade or a decade and a half away from aging. Yeah, there was a need to
median age down. They needed some fresh blood
to cultivate talent.
Yes.
And I was prepared to work hard and devote my time. And it's been a fantastic experience. So I serve on the board of directors, and it's an honor, total honor to do so, where I get to really kind of dig in on some of the issues that afflict Cedars in general, but also give me insight into the broader health system. And then I also serve on the investment committee for what we call the endowment, which is
so you're able to use your investment experience with them. Well,
it's been a real learning experience as well.
And that's is that billions of dollars in an endowment?
Yeah. So this is public. It's right there on the Cedar Sinai annual report. Yeah. Their total investable sums right now approximate, depending on what you count, what you don't count, call it, brackets around $3 billion, maybe more if you include some other things. And so it's been a really incredible experience.
So that brings me to one of your favorite words.
Oh boy.
Epistemology.
Yeah. Epistemology.
Epistemology. You ever hear of that one?
Today.
How that impacts decision making, how that impacts, I guess all facets of your life, but certainly with investing.
If I'm going to teach my kids anything, it's this word.
So tell me
Have you guys heard of fake news?
No.
Never heard that term. Never heard that term, right?
Yeah.
Have you ever heard of BS?
I've heard of that, yes.
Fair enough. So the world believes a lot of BS, right?
Sure.
We can only really know something about one or two things really, really, really well. And we're inherently, as humans, we're very distracted. We're forced to think about a lot of things, but we can only really know.
Yeah. There's so much noise. There's so much stuff coming at us.
There's so much noise. So what constitutes knowledge? And if you're in a business, whether it's real estate, whether it's investing in public markets, whether it's aviation, I'm a pilot, right? Yeah. You can choose to believe what you see or not, right? In the engineering and hard science professions, there is a high premium placed on knowledge. Epistemology means it's the science, effectively, it's the study of how do you know what you know? What constitutes knowledge, right?
Is it sort of like how do you know something is really right versus whether it's just an opinion or,
or it's a deliberate deception, or it's BS, right?
When you think about all the information that we have and the way we live our lives, so much of it could be wrong and is wrong.
Yeah, that's right.
So this cuts to the heart of that.
Right. So logical inference, being inductive to kind of get to some hunches, and then being deductive through the application of some pretty well, honed logical and critical reasoning facilities can get you to at least an attempt, can hone down what is actually knowledge, right? And
versus opinion or versus anything else.
Versus opinion, versus deception,
opinion.
Right. And if you can identify the gap, then you should be able to make a lot of money on an investment.
Yeah.
You should be able to make a lot of money in real estate, or you should be able to just understand the world a little bit better. So I think the one thing that always surprises me, particularly as a pilot, whenever there's a plane crash, or an aviation incident, there's a huge amount of news guys, right? Of news noise around it, right? We've just had it now with the 737 MAX, right? With Boeing, otherwise a fantastic company that's having some issues right now with this product. Anytime there is an aviation incident, it blows my mind how many people on TV speaking to millions of people at a time have no idea what they're talking about.
Got it.
Right? And any pilot can watch it and say, they have no idea. They have absolutely no idea what they're talking about.
It's that obvious.
It's that obvious because that's actually something where you know something about. So any area where you're going to risk anything, just kind of get the facts straight.
Yeah.
But it's hard. And, Nate Silver, one of my kind of favorite pop culture, statistician, thinking logic guys. You guys at 538, I'm sure you're familiar with him and read his sports stuff.
But
he's pretty fun.
No, I know.
He wrote a book called The Signal and the Noise. Or The Signal versus the Noise. I forget the exact title. But effectively got to this kind of same issue, right? How do you figure out what's worth paying attention to, what may be baloney, and what may be true? And, you can train it a little bit. You can train it.
It'd be a good class to teach at high schools and college. It probably is some, but that would be a good class. Maybe you should teach it.
Hey, there you go.
So where are you flying lately? You have a passion for aviation. Have you taken any trips lately?
Well, I'm thinking of taking the kids up to Big Bear on Sunday for a quick run. Yeah. If I can get back in time for the baseball game.
What's the farthest you've gone? How far?
I couldn't tell you. I mean, the particular plane that I fly is a non-glamorous 4-seat single-engine piston carbon fiber monocoque airframe.
And you've been
it goes LA to Tucson's about as far as I'd want to go.
And you've been flying like for how long?
I've been flying. I did my first flying lesson when I was 16.
Oh, wow. So you've been passionate about this your whole life.
Yeah, for sure.
That's
and as an investor, I spent a lot of time thinking about aerospace and defense as well. Right. Anytime you can anytime you can invest in something that you're willing to stay up and stay engaged on until 2 a.m, you don't want to go to bed. You don't want to turn out the light. You're under the cover with the flashlight. So
that's how you become an expert.
That's it. That's your thing.
Deep.
That's your thing.
That's fantastic. Well, how are you feeling about the Dodgers this year? Any chance? 3 years in a row going to the World Series? Are we going to be the Buffalo Bills of baseball? What's going on with our Dodgers?
It's pretty hard for me to believe we're not going to make the playoffs or at least be in the wild card. What do you think?
I think we're definitely getting to the playoffs. I don't know if we're winning at all. We need some more pieces, I think, especially pitching. I think, though, it's a pretty stacked lineup, and I'd be shocked if we stay healthy that we don't get into the postseason. Whether we go all the way, it's really that's just we need some more pieces and some luck, like always. It's
right. So on this epistemology point, the one thing I know I don't know anything about is how to predict baseball. I'm going to enjoy the games. I'm going to root for the Dodgers, like every guy in LA whose kids love the Dodgers. Yeah. In terms of actually being able to predict, I have no advantage.
You're staying away from that.
I have no advantage there, other than to try to.
So I could just blow smoke up your ass and talk to you about the Dodgers, and you'll be like, "Yeah, okay, that sounds like
you might be able to do
logic.
it with the well, yeah, because I can convert salary dollars into. I can take salary dollars and draw some reasonable relationship between salary dollars and victories. Right. So I might believe it a little bit if you blew smoke up my what. I probably wouldn't believe it the other way, but don't know it.
Well, Josh, it was awesome having you. Thanks for hanging out. I know we could go on for hours and hours, and hopefully we'll have a dinner soon and we'll get more into other things. But thanks for coming. Thanks for tuning in to The Deal with Danny Brown. Josh Lobel, you rock. Always good to see you, and looking forward to seeing you soon.
You're the best, Danny. Thanks, man.
Hey, want to thank Josh Lobel again for coming by. Man, he was dropping knowledge on us. I know a lot of that stuff is complex business talk, but he tried to break it down the best he can for us dummies out there. But thanks again for tuning into The Deal with Danny Brown. You can find me at Danny Brown LA on Instagram. Josh doesn't do social media so much, so I can't give you any info there. But I appreciate him coming out. Hope to see you guys soon. Thanks a lot.